Finance Ministry's 2022 budget revealed that all crypto transactions would be taxed at a flat 30% on profits, a move welcomed by many. But not all retail investors and traders are happy. In fact, several of them are seeking further clarification. Fortunately, we have the CEO of Wazir X, Nischal Shetty, to answer all our questions. Welcome to MoneyControl, Nischal.
Hey, Rahul. Thanks a lot for having me here.
Yeah, Nischal, first of all, how do you view the ruling? Are you happy with it or still a lot of work to be done?
I mean, definitely happy with it. Not the happiest, because I think there are quite a few, things that need to be ironed out. But I wouldn't say, if you look at, are we progressing forward or backwards? Are we going backwards? I think we are going forward, and that's what matters. This is a huge step forward, in fact, for the crypto ecosystem, because we've gone from worrying about a possible ban that may happen in the future.
And even
now, not to forget that. So from there, we've gone from there to today worrying about a 30% income tax. I think the situation is pretty amazing right now for the ecosystem. And the fact that there is a definition now in the books of the government, there is a mention of crypto in the books of the government. All of these things, I think, are, this amazing. Many say that you still don't have regulations. A lot of things can go wrong. Sure, but how many sectors have gotten a mention in the government's books this early? And how many have been mentioned in the budget this early? And for the right reasons. I mean, it was not a warning. It was not like, don't get in. It was like, if you're getting in and if you're making a profit, this is what you have to pay, which also means there is probably the government is seeing there is enough profit to be taxed, which again is a great sign for a growing industry. So overall, I would see this as a very positive outcome.
And Nischal, we have a lot of questions coming in. One of them is on the TDS. So can you delve a little bit deeper on the 1% TDS? Are centralized exchanges going to deduct the TDS? Because technically, a centralized exchange is just a marketplace, right? And the centralized exchange is not the counterparty here.
Yeah, I think this is probably the most contentious point, which is not just the collection or the payment of the TDS, but also the fact that a 1% TDS can be something of a onerous thing on the people who are day traders. I mean, if you're trading once a month, or let's say even once a week, it's not going to affect you too much because you can pay that 1% TDS and it gets adjusted accordingly to your taxes that you need to pay. But what happens if you're trading, let's say, 100 times a day with your capital? And people do that. Why? Is because day traders take a profit even if they're getting 0.1%, 0.2%, 0.3%.
Right.
If they, that's a profit. High frequency traders, they do that. And apparently, I think I saw someone say that if you trade more than 200 or 300 times under this new 1% TDS regime, your entire capital is going to lock up under tax. And this is not a tax that you're liable to pay because you will get a refund. So the problem is both ways, even for the government to collect this huge amount of tax, which only to refund it at the end of the year. And for the traders to get all of their capital locked under TDS. I think this is where the biggest problem lies. And as an industry, we are going to definitely make a representation to the government and put these points forward. As far as collection is concerned, I think that is still lesser of a problem, but definitely we need clarity because when you're trading on an exchange, you actually do not have the details of the counterparty, at least on centralized exchanges like ours, where you don't know who the other person is. And that is to maintain the privacy, except for the exchange themselves. So it would be ideal for the exchanges to be mandated to pay the TDS by deducting. It's also simpler and easier for the government also from a collection point of view.
Sure.
But again, these are open-ended questions right now.
And what about P2P transactions? Because there's so many who are, in the P2P space on your platform as well. How does one capture those transactions?
See, I think P2P, there are two ways you can do it. One is, let's take, for example, you're directly trading with a friend that without any third party in between. In that case, it's definitely, if you're the buyer, you'll have to deduct and pay it to the government. But if you're using a platform, ideally, again, the same thing could be done. But the problem is, in P2P, the platform does not even handle the INR. So very, very tricky. Very, very, it's a big question mark. But you could still solve it by displaying the PAN card to the buyer. and the buyer can then make a payment. But yeah, this is something where for P2P it can be a really big dampener if it has to be implemented.
Right. And another tricky point is, how is this recorded on your books? Is it recorded as consideration? Because that itself, there's an equalization levy I was reading. There's a 2% equalization levy that you would have to incur in case you're capturing TDS.
Yeah, I think all of these are still very open. It seems like the moment you try to solve one, there are two new problems that are opening up. So that's where, as an industry, we're trying to ensure that we put a representation forward. And that's also the GST angle. People are talking about would the GST be on the entire amount, or until now the GST has been only on the fee that the platforms charge. So quite a few things that are open. Honestly, there's no easy answer because arguments go both ways. And so we are waiting for some clarity. I think the best would be if the government can clarify these things so that the industry can go forward in the right way.
Okay. Now, Nischal, there are certain, there's a certain premium that Indian investors are paying for their crypto on exchanges, more or less in the range of 5% odd, right? Now, will this spread be a little bit more as your compliance costs go up?
Definitely. I think, in fact, even if you look at your TDS, for example, maybe people will start factoring that in. People will start factoring the, if for example, day traders, if they have to have extra capital, I mean, before you could trade with, let's say X amount, you might need 2x, 3x the capital, which means you'll have to pick that up from the market. So all of these will definitely add to that premium that exists. And it'll be over and above the already existing premium, which is going to make it such that for people to buy crypto in India, it'll be much more expensive. The good thing is that also there is a other side, which is when you sell, you will get a higher price, but the entry point itself is going to be much more expensive. And so yeah, that's the other, I think, downside of all these taxations that are coming in.
So Nischal, is TDS deducted on transfers as well? So if I move my crypto from a centralized exchange to perhaps my self-hosted wallet, MetaMask or my hardware wallet, would TDS be deducted at your end there as well?
This is again something which is open for discussion. And while I'm not an expert at this, I believe that what the government intends to tax is when you change ownership, when it goes from you to a different person. So if you're transferring it within your own wallets, and it's like, you can send your money between your several bank accounts, and you really don't have to worry about taxes. I believe it'll be similar here. But again, this is something which is, I think, clarity should be sought by the industry. And I'm sure we have that as one of the other questions for the government. But I'm less worried about it, because it wouldn't make sense for you to pay if you're just transferring it within your wallets, your own wallet.
Because it just uses the language uses just transfer, right? So one wonders exactly what they mean by that.
Yeah, but I think that transfer means transfer of ownership rather than the actual transfer, because that means then the other question is, in exchanges you actually never transfers. You're just buying and selling, but the asset is actually not moving. Does that mean you don't pay? I don't think it'll be the case. I think ownership transfer is what the point is out there.
Right, that makes sense. Now, Nischal, a large chunk of the retail investors jumped onto this meme coin mania, right? Especially in the last few months, in the last year, in fact, your Dogecoins and your Shiba Inus. And a lot of them will now be deterred because of the 30% tax. And so how do you see this affecting liquidity and volumes on your exchange?
I think it depends. I don't believe that a higher income tax is going to deter people too much. It's going to definitely make them upset and sad. But ultimately, you're going to pay only if you make money. It's not like it's going from your capital. So it's less of a deterrent. And in fact, that's probably one of the reasons why we saw a bump in our sign up the day of the budget. And after that, ever since, we've seen a consistent increase in the number of new people signing in. Though I think the TDS part, what we were discussing about previously, that might be sort of a dampener, which, if not changed or looked into, can reduce the number of day traders. And the day traders are the ones who actually bring a lot of volume into exchanges, which means we might see a drop in the volume in India in terms of trading, if I only look at it in isolation. But there is the other aspect, which is because of taxation clarity, there is a lot more confidence in people sitting on the sidelines who have wanted to come into crypto, and it's individual as well as businesses. So you could also say that this is also going to push a lot of new capital and a lot of new investors into the sector. So net, it's really hard to say whether this is going to boost up or get it lower. I believe it is going to boost because this is a small market where it's growing rapidly. So, and if the number of people signing up is increasing even further, I think it's only going to go upwards in terms of trading volume.
Yeah, because there are a lot of these young college students who perhaps don't fall under any tax bracket, and they're not really earning, but they were perhaps spending their pocket money, 2,000-3,000 rupees, 5,000, 10,000 rupees, and they were speculating on your meme coins, and then suddenly they are slapped with this 30% tax, and they may just say, okay, we're out. But you're right, this may also encourage a lot of businesses and those who are sitting on the sidelines to deploy some serious capital in this space.
Yeah, and I was, the other day I was just thinking, if you really stick to this 30%, all of those people who are not in the tax bracket, who did not have to worry, actually start paying taxes. While it's a huge task for all of them, and I don't think the government will go through this, or maybe I hope they rethink. But it might really rapidly increase the number of taxpayers in India, if you look at it. The only upside I can see of that is if you want to say that how many people in India are paying taxes, and we've always had that as a small number, maybe this might really contribute to that number increasing.
Yeah,
though I think the pain of filing taxes for youngsters and all, I think the government should definitely rethink this.
And Nischal, now there are certain tokens on your exchange and other exchanges as well in India where withdrawals are restricted. I was just playing around a little bit in especially DOT, the native token for Polkadot. Now, is there a reason why you restrict withdrawals for certain tokens, and is this likely to change in the future?
So there are quite a few reasons why an exchange would have withdrawals open or not of crypto. At least in our case, we have a lot of at least the most popular crypto withdrawals are open directly on our platform, and the rest of the blockchains are yet to be integrated. So what happens is there is this constant decision making, which is if we have to support or launch a new token, and people are always asking for new tokens. The one way to do that is, you bring in and integrate the entire blockchain of that token. You work through the security, the custody, and all of those aspects, and then you launch a token. The problem with that is it usually takes a month or two to do that, unless you really expand your team quickly. Now, but when we've seen our users, they've been wanting 10, 20 new tokens come up every day, and everyone wants those tokens. So we took a decision and we launched that as a initiative called Rapid Listing Initiative, which we've detailed out on what that is, which is we will first list the token for trading, and at a given appropriate time, as and when the particular token gets really popular and a lot of people have it, and we get a lot of feedback that open the deposits and withdrawals for this particular token, then we'll put the efforts to open them up. So that's something that we've been following, which is why a lot of the popular tokens you can withdraw. Some of the tokens which have different blockchains, and there's going to be a lot of time needed for us to integrate. Those are the ones pending. Having said that, there might be other exchanges. It all depends on why someone is keeping the withdrawals open or not. But I believe every exchange should at least keep some token, the popular one, like Bitcoin, for example, Tether, or a stable coin, Ethereum network. And the moment you open for Ethereum, you open for all the ERC20 tokens. So there's a lot of them. Polkadot and all, they are relatively newer blockchains, which will need a lot more effort on our end in terms of security, custody, everything. And we want to make sure that we do that in the right way. So hopefully over time we'll open up the other blockchains as well.
Talking about blockchains, and especially in this volatile market, as everyone in this industry knows, you just keep your head down and you build, or biddle in crypto parlance. And you've recently announced the launch of Shardium, a blockchain that you guys are building. Could you just tell us a little bit more about that and how that's different from the other layer one blockchains out there?
Sure. I think, just to get a bit of understanding of the state of the sector today. If you see, there are over 200 million people into crypto globally around the world, and the biggest problem all of them are facing today is high fees on the blockchain. And the reason is all of the blockchains of today, they were built at a time when 100 million seemed like a dream. Nobody believed it. There were a few million people, I don't know if there were even tens of millions. There were just few million people when layer 1 blockchains after Bitcoin, all the other blockchains were built. Now what has happened is it's even more clear that we are now, as an industry, we are going to go from 200 million people to 1 billion people. Nobody is surprised anymore. They know it's a matter of time. So how do you ensure that right now everything is congested with just 200 million? What happens if 1 billion people come? So what needs to be done is you need to build a blockchain which is at the start thought out from a scaling point of view. That let's build this so that it can support 1 billion people. Now that is what is Shardium, what we're building, with the intention that this has to scale for 1 billion plus people. And the way to do that is a concept called as sharding. That's where the name Shardium comes from. What is sharding is you break a network into multiple pieces. Instead of having one chain, you break it into multiple pieces, and all of that piece together form one chain. So now let's say you are making a transaction, and let's say the network has 100 pieces or 100 shards as they're called. Your transaction might be happening on shard 1 and my transaction might be happening on shard 5. So what happens is you get in parallelism, you also get in a lot of scalability. And if 100 shards are not enough, the network can grow if more servers join. It will go from 100 shards to 200 shards, 300 shards. A lot like the websites of today, where you don't think about much about scaling, because the website simply has to add more servers to support the new audiences that are coming in. In Shardium, all we have to do is support more nodes. Nodes are nothing but servers to increase the capacity. In the existing blockchain, if you see, why is the fee high? Is because they can't increase capacity, so they increase the cost. When they increase the cost, number of people transacting reduces. Right. So it's sort of detrimental to the growth of the ecosystem, but that's how they were designed. So we've designed a blockchain where you don't have to increase the cost, you just increase the number of servers so that we can support that growth in number of transactions.
But how are you solving the blockchain trilemma problem?
Yeah, so the trilemma for the uninitiated is that there is decentralization, there is security, and there is speed. And you can ideally solve for two, where security is like a given. You have to have security. So the other is either speed or decentralization. Now in Ethereum, for example, they have solved for decentralization and security, which is why the speed is lower. But the solution to the trilemma is sharding. And that's been known. And what we've done is we've achieved that sharding on a blockchain, true sharding. Now, again, there will be questions around, there are other sharded blockchains, and there are. But
like
the thing is
2.0 as well, right?
When
stake.
Yeah, exactly. And there are quite a few others who are trying. But there is a spectrum to sharding, which is, some are like ETH 2.0 says they have 64 shards only. And there will be some other caveats that, that you need to go deeper into. In our case, there can be unlimited shards. So there can be unlimited transactions per second achieved eventually.
That's fantastic. And we look forward to that. And thank you so much, Nischal, for coming on Money Control. And we're going to have to get you back another time as well. And lovely speaking to you and getting all the wisdom from you on Shardium and, of course, on all the issues pertaining to the exchange and tax as well. Thank you so much.
Thanks a lot, Rahul.